No, they're not going to do it. The chances are close to zero. Don't even worry about it. Don't even think about it. You got to focus on other things. Hey, everybody, Courtney Smith here with our weekly video newsletter, TradeSmith. And yeah, I don't think the Fed's going to raise interest rates in November. That's not going to happen. And you can see here that the market doesn't really think it's going to happen either. If you look far on the left-hand side there, what they really think is going to happen is we're now at about 68%. I talked about this a couple of weeks ago, thinking that the Fed is going to raise interest rates in December. And you can see here that even if they do raise interest rates, the market thinks that they're not going to raise interest rates by a total of 50 basis points. That's 0.5% until the third quarter of 2018. In other words, we're going to see low interest rates for as far as the eye can see. Now, this chart is really important, and I'm showing you this because it tells you a big story that's going on in the world right now. These are global rates at four very important countries. Up at the top, the green line, that's the U.S., and you can see that 10-year Treasury yields have gone from 1.4 to 1.8-ish, but the point is they're going up. Now look at the red line. That's the UK 10-year Treasuries. Man, they collapsed after the Brexit vote, and that was in June, and then they've been skyrocketing back up again since then. Now let's go down to the blue line, which has sort of been going sideways. That's German 10-year Treasuries. And then the orange line, which is under zero, you'll notice, is Japanese 10 years. But here's the point. We're seeing, except for Japan, generally rising interest rates on the long end of the yield curve around the world. And this is going to have a major impact because short-term interest rates are not going up as much. That means the yield curve is getting more positive. That's bullish for the stock market a year from now, and that's bullish for the global economy. So I'm coming out and telling you something. Next year is going to be better for the world economy than this year. Hey, everybody, just want to, here we are, Monday, October 31st, bringing the hammer to the markets for over 45 years. And, of course, we've been disclosing. God, it seems like we've been disclosing for 45 years, but you don't have it memorized yet. So please take a picture, memorize it. There will be a quiz on this next week. All right, also, freebies. Everybody, freebies and fully paid up members. Very important things happen in the stock market this week. Now, freebies, this is part of the fully paid up members see this chart every single week, but I wanted to show it to you. It's one of my super tricky indicators called adrenaline. So there's four lines on there. The orange line is the NASDAQ advanced decline line. The green line is the NASDAQ itself, and then there's a red and blue line. The blue line is a 25-day moving average of the advanced decline line, and the red line is a 54-day moving average of the NASDAQ composite. And it switched to bearish this week. And it switches bearish when both the NASDAQ and the advanced decline line go below their respective smoothings. Now, what's important about this chart? I'm showing this to you not only because it turned bearish, and it has a fantastic track record of calling the market, but there's a couple of other things on here that are important to recognize. One of them is the orange line, which is the advanced decline line. That is a better representation of the average stock in the NASDAQ. Whereas the green line, the NASDAQ, of course, is market capitalization weighted, and so it really, more allocated towards Apple, Intel, Microsoft, some of those big cap names. But notice that the advanced decline line has been in a bear market now for almost 3 weeks. The NASDAQ just breaking down now. What this means is there's a stealth bear market going on right now. A stealth bear market in the NASDAQ that is not showing up in the indexes, but is showing up in the average stock. Important. So there's two important messages on this chart. That's why I wanted to share it with you. Freebies here. First, the adrenaline gave a bear signal. That's significant. Number two, there's a stealth bear market going on in the stock market. And the same kind of picture shows up, by the way, in the New York Stock Exchange as well. We're seeing a stealth bear move. All right, the S&P, another way to look at the stealth bear move. Here's the S&P. First of all, notice we went down 4 days. We went down 6 out of the last 7 days. And the volume is increasing a little bit. So we're getting some partial confirmation of this bear move in the S&P. But holy moly, look at the purple predictor collapsing. I just talked about the stealth bear market. Well, the on-balance volume, which is the purple predictor, is showing that the smart money is hammering this market. And when the purple predictor collapses, usually the market collapses. So this is another big bearish signal. I've been talking about how it's been bearish, but man, it fell out of bed. It fell off the edge of the table, and this is not good for the S&P at all. Now, Dow Jones, same story, except of course, look, the purple predictor has been bearish for the Dow now since July. Okay, momentum, same sort of thing here, blah, blah, blah. Okay. Seasonality. This was another big change. Excuse me. I'm choking up here. First of all, the volume on the IWM, the Russell 2000, also up on weak prices. That confirms the bear move. Now, I talked about this last week. I said that we got down to that red horizontal line, and I said if it broke that, it would be bearish. And let me explain this in some detail, because this is a big change in my attitude as well. Number one, seasonality is supposed to be bullish right now. It's supposed to be bullish. It means the stock market's supposed to go up. Now, there are some years where it'll drift down into early part of November. This looks like it's going to be one of those years. But nonetheless, if the market's supposed to be bullish and it's making lower lows and lower highs, that's extra bearish, because a failed signal is a signal. When something's supposed to go up and it goes down, that means that the bearishness is so big that it's overwhelming what normally should be a bullish period. So I'm ranking seasonality now as bearish. Now, our normal seasonality, this is for next year, okay? So we'll worry about that. Okay, the yield curve's not giving us any clues right now. Asset allocation is moving into the stock market and out of bonds. We haven't got to bonds yet, but holy moly, they're in bad shape too. All right? Stocks are in better shape than the bond market, which is saying something. The stock market risk indicator, they're starting to move back into conservative sectors like utilities, but we'll take a look at that later. Global shares also drifting down, not quite as dramatic as the U.S., but still drifting lower. I still like the Japanese shares here. We got a momentum divergence on the RSI. The market sold off on slightly heavier than normal volume, so that's a little bit disturbing. The purple predictor also weaker than the market. That's a little disturbing, but I believe that the fundamentals, and not if you buy EWJ, but if you buy DXJ. If you look at DXJ, it's in a great bull market. I love that stock because I'm really bullish on the Japanese stock market. They're going to monetary ease for the rest of my life. Bonds. Okay, this is what I was saying. Look at that. Big gap down. Wasn't on super heavy volume. It was a little bit more than normal. Not that great. But that's a big gap. And remember that a gap is, in this particular situation, is very bearish because it means there was no buyers in the market. That's the most bearish situation you can get. It was not heavy volume, which means it was not a capitulation bottom. Probably a measuring gap. Well, check it out. Okay. Our indicators, 2 out of 3 are suggesting higher interest rates, which means lower bond prices. Now, the dollar has been something I've been focusing on for quite some time. I said that we were going to get up, and we were going to get up into that 99 area. Then we should see some resistance. This market's going to sell off probably down to about 97.50. And then we're going to start to see the bull market move higher. But this is just a normal reaction. That trend line was way too steep. Now we need to get it back to about a 45-degree angle, which is more normal and more sustainable. Gold, nice big up day on Friday. Key reversal, heavy volume. I think we're going to go up to the breakout level at just over 1,300. But at this point, you have to use that as a selling opportunity. When we get closer next week, I'll show you my exact trading strategy. This week, we'll just sit on it for a while. However, in spite of what I just said about a rally up to 1,300, 2 out of our 3 indicators are suggesting lower gold prices. And that's really the strong dollar. Oil worked perfectly, just as I predicted, precisely as predicted. We're selling off. We'll probably go down to about 47, 47 and a half, and then we'll remonitor at that point. Lots of big changes here, freebies. You got to be paying very close attention to this market. You got to be hunkering down. You can't be super aggressive in this market. No, it's not going to be a crash. That's not going to happen here. But the market showed a lot of weakness here. So, of course, freebies, you got to sign up for our weekly market forecast here, TradeSmith. I won't give you the big pitch. You know the pitch. You've been here for a while. So, also, don't forget we got our Stock Success School coming up. Please check it out. Go to that website up at the top there, bit.ly/Stock Success School. This is a peanut. All right, thanks, freebie. We will talk to you next week. Be careful out there, all right? Be careful out there for the next week. But you got to keep the faith, because I know we're going to get a nice big bull market here, but it looks like it's going to take until the middle of November before we get it. Hey, fully paid up members, hang on just a second. Take a break, and we'll get back to you in just a minute.